What is up, you guys? Welcome back to my channel. I'm Jessica and I talk about frugal living, fitness motivation, and minimalism. In this video, I'm going to be covering basic investment terms. Let's get into it. So I know investing can be really intimidating, and some people think they have to learn everything under the sun that has to do with investing before they want to get started. But that's not how it works. It's a learn as you go kind of thing, or else you're never going to get started. And getting started is the most important thing because of compound interest. Okay, so the first term we're going to be going over is stocks. So when you buy a stock, you're basically buying a tiny piece of that company. So when the company does well, your share of stock increases in value. And if the company doesn't do well, the less your share of that stock is worth. It's that simple. Okay, the next term is a bond. When you buy a bond, you're essentially loaning money to a company or government. Provided nothing bad happens, like bankruptcy, you cash in the bond on the maturity date and you cash in on the interest made from that bond. Next is a mutual fund. A mutual fund is basically a pile of money that comes from investors like you, and then they put the money toward assets like stocks and bonds. A mutual fund may have hundreds of stocks, and the purpose of this is to spread the risk. In most cases, there's money managers who buy and sell decisions for that mutual fund. That brings us to our next definition, expense ratio. So when you have a mutual fund, you have to pay the money manager to make decisions on your mutual funds. So the higher the expense ratio, the less money you're making on that investment. So this can also cover things like administrative fees, administrative promotion, fund expenses, things like that. The next term is index funds. This is popular to do because the cost is really low to do it. So indexes are generally a collection of stocks that represent the economy. So when you buy an index fund, you're basically buying tiny pieces of those companies that are in that index fund. Like the Fortune 500, that's made up of several companies, right? So that is represented by an index fund. So you're investing in little pieces of stock in all the companies that are in that one index fund. This is not managed by money managers like mutual funds are. And the last term I'll go over is prospectus. I hope I'm saying that right. This is your go-to for any type of investment you're looking into investing in. So this is a legal document that has detailed information about anything you're planning to invest in. Stocks, bonds, mutual funds. This has all the information about it. For example, this will tell you how much the expense ratio is, or a list of all the funds that are listed within that index. So as a reminder, I'm not a financial expert, I'm not an investing expert, I'm just learning as I go, and I just wanted to share it with you guys. I hope you found this video helpful, and I'll see you guys next time. Bye.